Good morning, friends. Uh, Time for the trade review of 19th of August 2020. I haven't made a lot of uh, videos with charts lately, so it's a good time to, maybe give you an update of what the charts are shaping out to be. So let's go and have a look at several charts that we see periodically, and that will help us uh, you know look at things in a slightly different light. First, let's go and have a look at the dollar index. As you can see, that tried very hard to go up but is now breaking down, and chances are that we will soon get below 92 on the dollar index. Now, why is the dollar important? Dollar is important because it funds all the carry trades in the world, which funds emerging markets, which funds precious metals and industrial metals. So as you can see, stocks like Titan, JSW, Tata Steel, etc., etc., they have all had a tailwind, and even in our markets have outperformed global markets in the last couple of sessions. So dollar is the key variable here. Now let's have a look on the S&P 500 chart. Again, very simple: 20 DMA up, 50 DMA up. So the market just keeps moving higher. Nifty, see, I had marked out this head and shoulder. If you all would recall, this is the point where support became resistance at about 10,850. Again, now support has become resistance at 11,100 thereabouts. 11,100, 11,050. You can choose, uh, you know, which level you want, but it's very clear that the market is showing support in this zone. So again, this looks like a consolidation, what I like to call as the box, and the market is now beginning to get out of this box. So if we are going to expand, you should have about 200 to 300 points on the upside. So that's as far as the Nifty is concerned. Now let's get to the Bank Nifty, because that helps in driving the Nifty up. So my sense would be that what looked like a developing head and shoulder could now actually be becoming a wedge. So this is the kind of wedge pattern we are trying to form. And what happens is that if we get above this trend line, we could actually move up. If this sort of a move happens on Bank Nifty, obviously Nifty goes up. So this head and shoulder is now developing into some sort of wedge, and I don't think levels of uh, 21,500 are going to be challenged. In fact, today we crossed 21,900 also. So 23,000 looks, you know, fairly. The market looks poised for 23,000 on the Bank Nifty. Now, let's have a look at some of the financials. See, this is Kotak Mahindra. Today's move again, very sideways. So there could be some kind of catch-up rally which may happen on Kotak Mahindra. So it's making this sort of a ascending triangle. Let's look at HDFC Bank. Again, HDFC Bank has terminated its downside midway. So where it was going down, making a lower top, etc. All of a sudden, this has been terminated. And if we can get past this zone, chances are we'll get back towards its 200-day moving average. So private banks are looking uh, very good. Again, if you want to look at something like ICICI Bank, this is sideways, a little weaker than Kotak or HDFC Bank. But all of these guys are making, these boxes, which means that they are refusing to go down. Okay, let's have a look at Reliance. Again, Reliance seems to have made some kind of a higher bottom. At some point, we believe that it should get past 2200. So going by all of these charts, it does look that the Nifty is poised to move on the upside. So I would think that from here you should not basically see a decline below 11,350. Let's have a look at today's uh, averages or today's price levels of support. We have support on Nifty at about 11,360 to about 11,316. You have resistance at 11,448 to about 11,492. On the bank Nifty, support is 21,845 to about 22,020. Resistance is at 22,377 to about 22,555. Lower pivot on Nifty is about 11,367. So broadly 11,360 is the make or break type of zone, and 22,000 on the bank Nifty again. That is the make or break zone on the Nifty bank. Overall, I think mid caps are coming back, but be very careful. You know, as many times mid caps go up, they often tend to lose 80 to 90% of their value once those rallies are over. So I don't want to recommend any sort of crappy mid caps. You can probably look at stuff like DMart, Avanti Feed, SBI cards, etc. So some sort of pedigree is important. Uh, that should be it for the day. I expect Nifty to again outperform global markets because the dollar is weak. I expect metals to continue to confound analysts and keep on moving higher. And overall, things like autos, etc. Some movement has been seen in construction and capital goods type of stocks. So you can keep an eye out there. But overall, it should be a broad-based rally, and you could actually have a melt up type situation because now the banks are also likely to participate. That should be it. Take care, trade well, and please consult your financial advisor.